For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with your daily routine and your habits. Force yourself to be getting better, 1% better every single day. How good can you get, traders? Again, the free downloads, the links are down below. They're both free courses. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Today, talking about trading 1 hour a day, identifying the best pairs to trade. So yesterday we talked about peak formations, and today I mentioned in the earlier mindset video that if you're inside of the high of Monday, heading into the Powell news conference at 7:30 New York time and the 10 o'clock red flag news on U.S. session, double news, and a lot of pairs were inside of Monday's high and low. And I received a few emails from some traders still struggling with the concept of what do you mean by inside. I've talked about Monday, Tuesday. 80% of the time, or a large percentage of the time, will form your extremes for the high and low of the week. So oftentimes, just as an example, we can get a Monday that breaks Friday's high. So we'll call this Monday. And again, Friday's low may have been a peak formation low. So we have a Friday peak formation low, and that takes out Thursday's low and reverses. And then Monday takes out Friday's high. And typically what I will look for is Tuesday to, in a simple 1, 2, 3, 1, 2, 3 type of scenario, to offer a day 2 trade, day 2 being Tuesday, but it's the third day in a 3-day cycle between Friday's low and Monday's peak formation high. Tuesday triggers the high possibly in Asia. Maybe London comes back and they get a high of day trade in Asia. In London, or maybe it's breaks down and pulls back and gives a U.S. session trade, low-hanging fruit trade on day 2 because they're going down and maybe they're working into the breakout, forming our high of the week and our low of the week on day 2. There's lots of different scenarios. But coming back to today, I said if you're inside of Monday's high, meaning that say Monday made a high yesterday and a low, and we're inside here, the whole point of what I'm emphasizing to traders is that, again, if you're in here because you like to trade gold or the pound, or yesterday the pound was the hot chick and it's still inside, that's, maybe you're going to get a high of the day opportunity in the U.S. session. I have no idea. But coming back to best trade setups, if I'm looking for the stair step, whether that's in the U.S., or if that's day 1, day 2, and day 3, that can also be Asia, London, and New York. So a comment I received from a trader was, you didn't get 3 pushes, you took that trade, and there was no engulfment and whatever. And I showed him clearly 3 pushes can be Asia, London, and New York. And the false break can be up high right in the first 15 to 30 minutes for a short trade down, even though it's in a long trend. That trade was 50 pips. So again, coming back to working 1 hour a day, 1 hour per session, regardless if you're trading Asia, London, or New York. And one trader said, can I trade all 3? You can, but I reiterate, my goal is not to take as many trades as possible. My goal is to take the best trades as possible, and I would rather take one trade at 3 times the size up top for whatever, 50 pips, rather than taking 3 trades at 10 to 15 pips, or maybe you've got a great trade in Asia that's maybe gone 75. Whatever that is. But if you understand what a best trade setup is, you'll understand that you can scale into that setup. I don't want to take a lot of trades. I want to take as little trades as possible that are the highest quality with as much size as I have accumulated through accomplishing those results by doing it again and again and again, not by just sizing into a trade because I've had, 5 winning trades in a row, or I've had, 150 pips in the last 5 trades. I want to know, what type of trade setup is it? Have I been getting those profits from executing best trade setups? And if so, keep bumping up size. And then when I have my sizable first red day or 3 levels of rise, 3 levels of fall trade, high of day, low of day, for a large scaling opportunity, those trades are where you can make huge income. The other trades are what pays your bills. So, you want to replace your income. Your bread and butter scalps will get there with size. Your large sizable trade setups can make you a lot of money. So coming back to Monday forms our high and low. If I'm inside on Tuesday on any pair, immediately I'm not interested. The only scenario that would negate that is if I had a Monday, Tuesday, Wednesday maybe inside, and a Thursday, maybe a Friday inside. Inside bar for a trade on Monday, possibly, that could be a huge day. Or if I have a Monday, whatever, day 1, day 2, day 3, inside bar, breakout pullback on Friday or Thursday, whatever that is, for a large blow-off move, which could go to the low of the week. That's where inside bars can be relevant. The other scenario is that I'm in a trending market, large trending market. Japanese yen is a great example. And we get an inside day on the Monday. So Friday peak formation high, inside bar on Monday. They trigger the low on Tuesday, come back inside for a large trade on Wednesday. Put in a peak formation low on Tuesday, close it up either near the high or outside of the high on Wednesday. We get our consolidation and the explosion for the trend trade after the inside bar traders are trapped. So there are different scenarios with the inside bar. Somebody asked, does it count? Absolutely it counts. So for example, day 1, day 2, inside bar, I'm waiting for day 3 because I want to sell high. If I don't get that, so this is still part of our count. Day 1, day 2, day 3 doesn't eventuate. Guess what day I'm looking for day 3 longs? 1, 2, and 3. It's going to be on Thursday. And in the odd case, it could be on a Friday. So because we could get a Monday, Tuesday, Wednesday pattern. Let's bring this back on. We can get a Monday, Tuesday, puts in our low, Wednesday, Thursday, Friday, for a Friday trade up high. So again, different scenarios. But coming back to what we're talking about today, 1 hour a day, and we had double news. We have Monday's high, Monday's low. If I'm inside, that is not a pair that I'm looking for. Not if I'm looking for the stair step. So I need to see that stair step either for the day itself. So we can get level 1, level 2, level 3. Okay? It doesn't mean that it still can't go back up. This could be, on S&P, this could be a 250 pip move. There might be 100 up, 100 down, whatever, but it's about the timing and the quality of the trade setup. So again, I mentioned not chasing pips. If you are inside of a high and a low, you're inside, how can that possibly be a stair step for a large move if I consider my best trade setup to be one that goes up in levels for the collapse, or vice versa, drops down in levels for the explosion? How can that possibly be a best trade setup if I'm inside and we're in a narrow range or, some smaller peak formations? To me, all that is a consolidation inside of the high and the low. Let's take a look. So Canadian dollar, although we've had some significant trending markets, it was not on my radar today, but I will talk about a couple things. Number one, we had a reset on the Thursday. Thursday was a peak formation low reset. So a lot of people have asked, can you go over the reset? All the reset is when you are in a trending market, day one again takes out previous day's low and resumes the up move. Day one longs are triggered in the market, but we had hit the previous day's low. This is Monday, Tuesday. Dump and pump on the day two. We have day one longs in the market. Day two longs on the Fed into the Tuesday, Wednesday, Thursday. We're up high. We had on day three, a high of the day sell in the London session, an example of where the Canadian dollar traded in the London session at the high of the day on day three. Day two longs in the market. Then we had a U.S. session low of the day buy in a trending market. So again, you'll notice this is inside. They got traders shorting this down, which is still a scalpable trade right into the U.S. 12 candle open. But you'll notice again something that we talked about yesterday. That move down forms a peak formation low in the U.S. session in a strongly trending market into the peak formation low of the Fed. But coming back to the reset, that peak formation low on the Thursday forms our reset on a day three. So instead of that collapsing on day three, as I just talked about on the whiteboard, we now have a peak formation low on day three that goes sideways into consolidation on the break of the previous day's high to continue the trend. How do I know that? Because we're looking at it over here, not here. When this market goes vertical and traders are long into that market, we don't know that that's a peak formation reset until we're into the next day. Okay, Friday, now that becomes our day one. Why? Because that high of the day that they broke out of and reversed now becomes our trapped volume at the low, starting our day count again for day one. This is below the previous day's high, which becomes our blue tracer now for the bottom of the move. How do we know that? Because the next day closed as a bull candle. Day one, day two, day three on our Monday. We have a day three trend trade on Monday, beginning of the week. So yes, that is day one for the new week, but it's day three in our 3-day cycle after our peak formation reset on the Thursday. Now, I know traders are going to get confused, but I'm going to say this. If you want to make money trading, that's part of the process. You're going to have to learn some things. It's not going to be, hey, I read some books and we're going to take some trends and I'm going to be financially free forever. The market doesn't work like that. That's what everybody wants. But there are going to be some challenges. Now, coming back to the concept of trading setups, you don't need to worry about trying to trade all these moves. The question each session that you go to trade is, do I have a setup? So, coming back to today's video, trading 1 hour a day, identifying the best pairs to trade. If I want to go up and trade the high of day, low of day, there's my high of Monday and my low of Monday and the break of Friday's high, which for all intents and purposes, we'll just ignore that. But I'm inside. Now, I talked yesterday about 3 session setups. US session high. Asia drops down inside and makes a lower peak formation high inside heading into the Europe-London session. Session 1. Session 2 is Asia, lower high. Europe Open puts a low in place. They retest that low at the London Open for the reversal trade, a double bottom reversal. Now, not saying this is a best trade setup, but I want you to understand the concept of 3 levels of rise and fall. 3 sessions, 3 levels. So again, if we just put our number boxes on here, we have a peak formation above 50. They drop it down 50, 50, and the upper box is 50. That's 150 pips. That's 3 levels of 50. 50, 50, and 50. Lower peak formation high in Asia becomes our new high of the day for the Europe-London reversal trade, which gave 50 pips back up after 3 levels of drop and 3 sessions. US, Asia, inside, lower peak formation, London puts a low in place. Europe puts a low in place. London reverses the trade. This lower high down low is the dead giveaway for the vertical reversal. There's your W. But coming back to the initial conversation, not on my list today for a possible best trade setup. Now, if we just look at our high and low of the previous day, our high and low of the day itself, we currently are just trading through that as we record this video. So we're up high, we're just getting outside of the third hour of the US session 12 candle window. So you can see now, even with this type of scenario, there may be traders who are long after the news or on the New York Open. This little bullpen hammer is the New York Open. But again, for me, all intents and purposes, this was not on my list today. I wasn't even looking at it because we're inside. So traders that took this possibly at the New York Open prior to the news, they're filled roughly at 95, and they should have their 50 pips right as we speak. So they jam them in sideways back into the peak formation reversal of the London session. So again, just coming back to identifying these, we had a low in place. They come down at the London Open, put in a peak formation low. And where do they trade back up to? They trade initially right back up to the peak formation high of the Asian session, pull it back into consolidation into the breakout, go vertical to the high of London. So again, a break of structure, pull it back down into that reversal, peak formation low, New York Open for 50 pips back to the high of the day. Again, so Swiss franc, same thing. The difference, again, just on this particular pair. So again, we can look at the previous day's overall low, but we've broken out and pulled back. That lower pullback heading into the close of the session was our new peak formation low at the New York Open. They came down gradually, creeping trend back down. So again, US, Asia, London into the US 12 candle window. Traders who have bought at that low of the US session, same as the Canadian dollar. So again, noticing that they'll move in similar patterns and identifying if you're going to trade one of the US crosses, which one may be the best setup out of the three. So if I was going to take one pair, if I was looking for something on US crosses that they seem to be better set up on the day, I would avoid possibly the one that's had the big run and look for the pair that is coiled up the best, because it has the potential now for the greatest amount of movement. So again, that analogy, don't chase the hot chick. The hot chick is where everybody flocks to in the next session. It doesn't tend to do as much, and the one that everybody's ignored has the explosive or the cleanest trading movement. Japanese yen, again, was inside at the time, and a funny market after our 500 pip move and the reversal on Thursday, peak formation reset again. So day one is our peak formation reset. Day two, an inside bar on the Monday. We talked about this yesterday. Day two, shorts right at the Asian end of the Asian window for a nice 50 pip reversal trade that continued to make higher highs. So we're on day one, day two, day three longs in the market. So we have, day two longs about to be trading into the market, but we were inside, and again talking about our stair step, not a normal 3 stair step pattern. This could be working its way all the way back up to the high, which means we could get possibly a trend trade tomorrow, or they keep creeping it up, and all of this slow grinding volume becomes order flow for possibly a nice big move down. No idea. Have nothing at this stage that looked like an ideal best candidate for a trade setup, but inside today and was not part of my list for bears. Again, the pound. So coming back to what we discussed yesterday, peak formation high in Asia in the window before blowing off. That gave us a peak formation low. Peak formation low, and then higher lows right into the Europe session. That peak formation low got broken on the US session last night, but they went down and traded into that low creeping trend for a short squeeze reversal in the Asian window that has now just traded up into that US session high, which was our previous Friday's low of the day. So recognizing, if we just come back to high and low of the day, we're inside. This is the sort of stuff I want to avoid, so I don't even look at it. Like, I'm not even interested. I know that some traders were expecting that to collapse because they had brought volume up high, but we're inside still, and that is not a best trade candidate for me. There are some scenarios where this could be inside, but it will roll over and capitulate typically into the open of a session when it's getting ready to blow off or break structure and have a pump. Remember what I said, there's no pump. There's a small micro pump, but this is essentially all trap volume inside of that original breakout. We can move that up on the higher lows, and we've broken structure now, but this is a market that I definitely want to avoid today. Again, hot chick yesterday. People are looking to trade it today because of all the movement, and they're frustratingly getting jammed up, and they're missing out on other opportunities. Euro similar, had a bit more movement, but just coming back to our premise, previous day's high and low, and then adjusting that down to a session high and low, peak formations. Breaking structure in the US session, they put in a peak formation low in Asia. That becomes our new anchor point for our low of the day, and we would look for 3 levels of rise. We had a break in structure and a pump up, but again, the euro has sort of rolled over, but not much in terms of risk reward, and again, we're inside of yesterday's range. So some traders may have scalped something in there, but again, not an ideal best candidate. If it was, it should have exploded. If you were in this short trade and it's creeping down, I would be looking after at least 45 minutes to be cutting that trade. It's just struggling to go. And again, you can see how you can just be getting jammed up and kept inside. Aussie dollar, so we had our peak formation high from the US session, which again comes back to the break, 3 peaks into the previous day's low. This is a pair that potentially had an ideal best trade scenario because we had 1 push in Asia, 2 pushes in London, a break of structure in the gap time, and then a pump up with an engulfment right into the beginning of the US 12 candle window. So for traders that shorted that, they got on the Aussie, I believe that closed at 88. They would have got 40 pips for sure, depending on how they held on to that, but 25 reasonably fast. And that's our 3 peak pattern into the peak formation. So I mentioned yesterday, they will pull you up into the peak formation. It can be a head and shoulders. It can be 3 levels of rise, whatever that is. And then they return back to the anchor point. So in this particular case, we could look at the breakout level of the reversal W into the close of the session as a possible area for them to retest. You can trail that, take some off, however you would like to do that. Doesn't matter. New Zealand, again, similar to the Aussie dollar, we have a peak formation into the previous day's low that formed for our 3 peaks, and then the breakdown. Again, I will draw the breakdown area. That's our peak formation reversal. And we see this similar scenario. We get a break of the rectangle at the bottom that starts our first level of rise in Asia. So again, go back to the whiteboard, the stair-step situation. Level 1, level 2, level 3 into the micro M structure that was made in the London session. The break of structure, which broke the low of the Europe Open. And then the pump up back up into the peak formation. Remember I said they'll bring you back up into the peak formation. There's our death line. If they break that, everybody's trapped up top. New Zealand dollar traders, 50 pip move. 25 to 50 capturable, but we've had over a 50 pip move after 3 pushes up into the peak formation. Euro yen, again, an example of a chart that I wouldn't even be considering. This narrow choppy price action, coming back to the whiteboard example, does not exhibit anything that I'm looking for a day 1, day 2, day 3 type of scenario. Maybe this will eventuate over the next few days, no idea, but this tight coil consolidation suggests that we will see an explosive move, and this could be a basing pattern, a dump and pump basing pattern for a explosive reversal. What I would need to see for that to happen first is a breakout pullback scenario, and this is a sort of market that can go parabolic. If it was to break down on the opposite side, this market could be a rectangle for a measured move in line with the original trend breakdown. So again, the breakout pullback could be on the other side, but if this is a reversal dump and pump scenario and our peak formation's been put in on Monday, this market's first target will be last Thursday's high. No idea what it's going to do. When it happens, I'll look at it. Gain pound yen, the hot chick. Big moves in the last few days. Lots of fantastic trading opportunities. Coming back to high and low of the day. This market sold off in the US session. Continued to push and not go anywhere and broke structure in the Asia this morning. That becomes my new reference point for the low of the day. Asia moves higher, so I move that line up. That's my blue tracer. That's my blue tracer. I can adjust that down to the last peak formation from the US session. And again, not even in my radar. This is a market that I have no interest in trading. It doesn't exhibit the nice peak formation price action that I look for trading opportunities. This is a dead giveaway that this could be just a consolidating market trapping traders. No idea what it's going to do. This could be our peak formation reset for a reversal. You'll notice we're trading inside the high of yesterday and the breakdown low of Friday. So this nice tight coil suggests that we probably will see an explosive move. Won't even look at it until I get something breaking out. Spot crude, again, is an inside day. The difference being, if you just take some simple concepts, yesterday's trade came at the high of the day. We had a short squeeze right at the New York 12 candle window open. 3 peak formation low, and then 3 pushes into that low, right into the US 12 candle window open. Peak formation low in London. 1 push, 2 pushes, 3 pushes. And our pin hammer for the explosive short squeeze right at the US 12 candle window, which rocketed up to our high of the day. And then high of day traders had the opportunity for an awesome short trade all the way back down. And now, for those of you who are struggling, learn to draw 2 lines and then stick to trading at those areas. That will solve a lot of your problems. Trying to trade price action inside like this is where you will damage yourself. So, today we had 3 pushes into the low. The market moved higher in the Asian session. Again, oil its ranges are obviously a lot greater than a lot of the currency pairs. The breakthrough low of Friday doesn't really provide much long-term resistance. It was temporary. They jammed them in and then it exploded vertically. But this is a market that was inside. This is the stuff I want to avoid, especially in this sort of market. This is a 15-minute chart. And this market will chew you up. If you do not know what you are doing, do not trade oil. But these types of days when we have clearly defined peak formations, just coming back to 3 pushes. So you'll see this clear as a bell. 1 push. So we break out of the lower peak formation in Asia. 1 push, 2 pushes, and 3 pushes for a US session high of the day trade, which we talked about last week. We took that. 3 pushes up into the previous day's high. Peak formation breakdown. Okay. Breakdown, break in structure. Lower peak formation in London, the second push. And then the third push in the US window, 3rd push up for a huge trade down. So again, looking for what are the best trade setups. So if a market is inside and consolidating, this is not an ideal candidate. Now, we may be seeing a high of the day trade right now. We got longs trapped. My session's over, but for those of you watching, we may see something collapse all the way down to the low. That micro M structure, 78.83, stops are definitely going to be down at 78.80. That's a possible 75 pip move. No idea what it's going to do. I'm not trading outside of these times. My session's over, but you're inside. And so this is a market. If this had taken out a previous day's high, this potentially could be a great candidate. We'll come back and look at this when we're done the video, because this is an example of where when you're inside and traders are still trading, that they can be getting caught in patterns that are tricks and traps because you're inside. So looking at gold, we had a breakdown through the low of the day right at the end of the session, and then a lower peak formation high. Immediately the market traded back up to that, pulled back. That's our level 1 for Asia. Continued to go higher into the Europe-London window, level 2. So 1 push, 2 push, and then a third push to the high right into the open of the US 12 candle window. And again, traders that shorted that, you've shorted it up top, and roughly speaking, that range from high to low, double zeros down to 25. So a 75 pip box, but again, some very difficult price action to trade as opposed to a vertical blow off move that comes after 3 pushes into the high. So you're inside. Previous day's range was a lot bigger. Difficult market to trade, and if you were in this trade and you sold it high, after 45 minutes to an hour, I'd just be getting out, because you're recognizing now you're caught in choppy price action. Difficult market to be in. Can't go to break even. You can't, unless you took profits possibly on this pushback. But difficult market to trade. Inside, again, I'm looking for candidates that are up at the previous day's high or low. Which brings me to the S&P, or US 500 as my broker's platform calls it. So yesterday we had 3 peaks. Again, we had the peak formation over the close of the session, a pump, creeping trend down. Second pump in Europe-London window. And then the third pump, so 1 push, 2 push, 3 pushes into the US session. We talked about this. This was the 3rd hour trade for the high of day, high of week on a Monday to the low of the week. Shorting opportunity that again gave a peak formation reversal squeeze right into the open of the US session. So again, the count starts again. 1 push, Europe-London becomes our second push into the high. And then we get our third push up into the gap time, right into the US session 12 candle window. That gave a nice 100 pip move straight down before also giving an explosive 100 plus pip move back up to the previous day's high on the New York Open, which we'll look at. Those are 2 trades that I did take. And then other traders had the opportunity to sell the high of the day right at the blue tracer for a large move down. Now, we did get a move down that took out the low of London. They pulled it back and then rolled it over, and we'll look at that now. So for me, traders, I mentioned that we had double news. We had Fed Chairman Powell talking at 7:30 New York, and then we had a 10 o'clock news release as well. First hour, we had a great opportunity. I just happened to come home half an hour into just prior to after the window had opened, knowing that we had Powell speaking. I didn't see a whole lot of volatility, but what I did see is 3 levels of rise, and the S&P was the best candidate that I thought was trading on 3 levels up near the high of the day. But what we got was right at the end of the first hour, a nice M structure, 51 minutes in at the high of the day for an explosive 100 pip move down that had trap volume above the quarter level at level 1. This is a dead giveaway when there's space like this inside the 100 pip box and they bring you up high. That is a dead giveaway if we get the false break reversal set up, that they're going to come right through that. And where did the move start? The pump starts right in our last hour prior to the 12 candle window. They pump it up. They trap volume up high. they go up vertical, the M structure for the vertical move down. Now, I put a post up because now we have a peak formation high inside of the blue tracer, and we have a peak formation low. Now, I said yesterday in yesterday's video, they bring you back into the peak formation for the explosive move up. Well, with the S&P, obviously, 9:30 New York time is a key time. Why? Because that's when the market opens. And what do we get? We get one push, two pushes, and a third push that hits our peak formation low, engulfment reversal, for the explosive move back to the high of the day. Now, we had news coming at 10 a.m., but they went up, hit the previous day's high. The engulfment of the high bull candle becomes our 1 bar stop entry for our short trade back down. Now, I did not take this. I was in the short trade here, the long trade here. At that stage, I thought that's a damn good Tuesday morning. Best setup, I thought, out of all the pairs. But we did see a nice collapse gradually down. The news brought it vertically. Sorry, that was prior to the news. The news brought it vertically here. 3 peaks, and then the reversal trade after they took out the low of the London session. We'll just zoom back here for a sec. They took out the low of the London session and the peak formation low where that pump and dump began from London. And that now is our 9:30, our news 3 peak reversal. They push back up into the news peak formation at double zeros, breaks down, pulls back, and that market fell through the floor back to the low. I don't know if it quite got to the low of the day. It got to the low of Asia, took out the peak formation low in Asia, and no idea what it's doing now. But we did get 3 levels of rise: Asia, London, New York. So the high of the day trade, even though my trade, as it turns out, was not the high of the day, at the time it was 1 hour locking in the high. We had low hanging fruit. This was an easy 100 pip move down. This explosive trade, okay, remember I mentioned that in any type of short squeeze, you will always get 3 pushes into the low. These lower highs are the fuel. So this to me is a 1 bar trade. When this goes, after this bar explodes, I'm at break even. There is no way this should come back on a short squeeze. It should go straight to the high of the day, which it did. Take the money. You're done for the day. 1 hour. There's 2 trades in an hour. Without being there when the news is on board. This is after the Powell speaks. This is before the 10 a.m. news candle. But you can see again, we were 3 levels of rise. We had high of the day. We had trap volume, the whole package. This market's still falling. But that was a simple, straightforward trade. Some traders traded the NASDAQ very well today. Same sort of scenario as S&P. They're very similar markets, obviously. We had our high of the day. We had Asia pumping up. Europe, London continuing that move for 2 pushes and a third push into the high. Similar pattern to the S&P. S&P gave a very similar trade in that first hour for a 50 pip move down. Very fast, explosive 50 pip move down. Whenever you see a box of volume getting trapped in an upper part of a level, right at the open like this, and again, you can count the levels. Okay, it's 100 pip box, so essentially this becomes level 1, this lower box between 50 and 75. Your number, some people's numbers may be a bit different on their charts, but level 1, level 2 is that 50 pip box, and then level 3 in the US window. And we get 1 push, 2 push, 1, 2, 3, and engulfment for a nice 50 pip explosive move. That becomes a peak formation low. Peak formation low before the New York Open and our high of the day. The market goes 3 pushes, 1 push, 2 push, third push explosion that engulfs the whole lower box, and we get a nice 75 pip explosion through the high of the day. The high bull gets engulfed. Again, once I have a trade thesis in place, I focus on levels. The previous day's high is there, and we also have 75. 75 as well as the previous day's high. We have a first bar opportunity after the engulfment, or we have the bear pin hammer engulfment, and that was over in 2 minutes for 50 pips, coming back down the other way as well. So again, 3 levels of rise. They pull it back inside. 1 hour working the high. False break, reversal, engulfment for 50 pips, a peak formation low, 1 push, 2 push, 3 push, New York Open, explosion back through the high of the day, hitting stops, triggering breakouts, taking traders in the wrong direction before reversing and pulling the floor out, creeping trend back up into the breakdown from the news candle, rolling over and dropping through the floor. So hopefully you got value from today's video, traders. You can be done and dusted in 1 hour. You can keep trading if you want. I like to take the trade, lock it in, be done, get off the screen, come back the next day, rinse and repeat, and do it again. Stay safe, stay out of the choppy mess, keep it simple, work from the outsides, look for those stair-step levels of rise and fall. That's what will give you order flow for a vertical, fast, explosive move when you get that opportunity. Keep it simple, traders, and may the markets go with you.